Some of the questions that I had from the last round that I didn't have a chance to ask were really funny. We had, should self-driving cars be allowed to smoke marijuana? Which Denver dispensaries sell on Alpha Bay? Is the mind unconquerable on marijuana? And now they're asking to see my butt. I might show you my butt later, but not here, not now. We're trying to plan something fun for you guys after this lets out. Right now this is on Audica.tv. I myself am a cam girl on Exotica.tv with Chesaluna over there. And we have an SFW channel that is Audica.tv. So yesterday was on the NSFW Cam Girl Network. Today is on the SFW Audica. If I want to sell a surplus of my marijuana on the darknet because Colorado is an oversaturated market, should I use Monero? That's another question. All right, well, I'll get started. So a lot of you probably know me. For those of you that don't, my name is Chris DeRose, and I'm a guy who made a lot of mistakes in Bitcoin. So many mistakes that I think at some point I just stopped giving a shit and started talking about them very openly. I in a lot of ways, am completely unremarkable as a Bitcoiner that is early to the space. But having the experience that I have now, I think I'm in a position to teach to you some of the lessons of maybe my mistakes. And a lot of things we do are generally on that theme. I run a podcast with my co-host, John Seth, who couldn't make it here. We run the Bitcoin Uncensored podcast. I do think it's the largest podcast in the Bitcoin space. If you look at the stats on LTB and Epicenter Bitcoin, they're pretty obviously bought. So if you look at just us, we're averaging 2K plus per episode, sometimes as high as 8K listens per episode. And we have a very skeptical approach to things. So I think that a lot of this talk is probably going to offend some of the people here who are probably just newer to Bitcoin, quite frankly. Now I see like a Dash shirt over there. Are you a big Dash supporter? Because you're going to get offended. Okay. Oh, no way. Pleasure to meet you. Yeah. Oh, wonderful. Everyone give this guy, yeah, everyone start clapping. Can we have a round of applause, please? This is a defect from the cult of Dash, I suppose, for lack of a better word. You were involved in like a lot of the governance over there, and I think you were listening to some of our show, and you wrote an article about how you saw it in a very specific way that was...
Yeah, like if you look at the charts, you can like track the progress of the estimate voting. You'll see the large jumps. It'll be like over the 600 votes that are all
We'll talk about Dash a little bit later, I think, in the presentation if we have time for it. But thank you so much. That was a wonderful article. I really appreciated it. We mentioned it on the show. I've done a lot of writing. In fact, Bailey over there is a friend of mine from at least a little while in the industry. She is a writer herself. What's funny is when I met her, she was a very professional person at a very professional conference. And here she is today, a very Bitcoiner person at a very Bitcoiner conference. I know she still has her professional side, but you're seeing her in I think, a more accurate light today, which is kind of cool. Appreciate you being here, Bailey. Hopefully I'm not embarrassing you. So I've written a lot in the space. I've written a lot of code as well. And I've seen so much. I've been exposed to a lot. I had a rule in this space to almost attend everything that I could possibly attend. And in doing so, you get to see a lot of the behind the scenes stuff about how this works. I'm not like a super stoner guy, so it's kind of a little weird for me to be here, although certainly I'll be smoking weed at the event, and I think it's great. I think there's a context here that is very relevant to Bitcoin. I think for a lot of people who maybe don't see the connection the way I do, hopefully I can get to my views on this matter. You know, the first thing on the internet that I've sold, I think, is famously weed back in like the 70s or 80s or so. There's a lot of parallels, I think, to the like underworld side of the marijuana culture and Bitcoin. So certainly they work hand in hand, as a lot of the people were even suggesting. In the darknet markets, I'm a little bit more skeptical about Bitcoin in the non-darknet markets for marijuana, but you know, it'd be great if it worked there. I think that the theme of this presentation is at least an appeal to like pragmatism as I see it. And certainly I was asked to do something on scam busting, and I think that's the general theme here. You can see on the screen just a very, very small sampling of all of the altcoins, business pitches, ICOs that I've seen over the last like 5 years or so. Each and every one of these has a story. The story is almost always the same. The story is the story of a exceptional claim that was met with unchecked peer review with a pitch to invest today, followed by a large pump, followed by a large dump, and then on to the next one. And you just can do that all the way down the line, and that's pretty much the entire story. There are a lot of spectacular nuances. The DAO with Ethereum is one of those spectacular nuances, and all kinds of stuff in between. I think for a lot of the old timers in the Bitcoin space, we do throw the term scam out a lot. And so a lot of people who listen to my channel will be like, well, you think everything is a scam? And it's like, well, when you deal with unregulated markets, the incentive structures are such for people to run pump and dumps or to have no accountability for their actions. And so that leads to a place that is inordinately filled with bad actors, improbable ideas, and fantastic pitches that will not come to fruition. So I've been seeing this since Litecoin. I think that was the very first such coin. And in Litecoin's case, it's actually stuck around for a little while. But as the Bitfinex Zane rep said earlier, what percentage of your volume do you think is Litecoin compared to Bitcoin? Yeah, okay. So Litecoin, I think, was pitched as, the pitch at that time, the extraordinary claim was that we needed a silver to our gold. Whether or not it's realized that claim, I have no idea. But there wasn't really a lot of logic there. So I think that it probably needs to be discussed, why are you here? I've seen a lot of reasons for people to come here. And I myself, I came here for two reasons. I remember thinking Bitcoin was really, really interesting, but never going to amount to anything because it was just ridiculous. Then I saw Silk Road. Then I bought drugs on Silk Road, and I was like, this is real money. And for me, that was what kind of sold me. And there's a lot of old Bitcoiners, people who you really know, who won't admit to that, but they'll tell you that privately. So at this point, I just stopped caring. I'm not going to name their names, but you can just imagine that a lot of the people who came around the time of Silk Road came because it solved a problem for them. They needed Bitcoin to achieve a goal, and it realized that goal for them. And then they came to the space because we were just going crazy at that point. There's a lot of really cool stuff going on here, which we can talk about. But I think that there's a combination of people who are here for ideological reasons, and that's typically the people who want to end the Fed or have a libertarian bent, who want to reboot the system. Those people came not because of Silk Road typically, but they came in the hysteria after Silk Road largely. There's people who are here to get rich quick. Those are the altcoin speculators. They're all here to gamble. They have been not wanting to necessarily reboot themselves, but what they want to do is ride the next wave of the improbable success that is Bitcoin. And those people have been doing that improbable bet over and over and over again. Usually they'll get scammed, they'll lose their money, eventually, maybe it's the first time, the 10th time or whatever, and they'll realize that, wait, maybe this is not actually something that's gonna work, penultimately. The last class of people are the people who had no other choice. And those are the most interesting people and the most relevant people, I think, to the space. So whenever I look to see in a cryptocurrency pitch at this point, I need to figure out who needs to use this, who has to use this in order to put food on their table, to resolve an inelastic demand that they have for a good or service or a policy in their life. And a lot of the Ethereum guys don't like that a lot because they're here to find aggregate efficiencies that are independent of that sort of requirement, and that has never worked out well in this space. So we have an old history that I don't think people recognize in the digital currency space. And that history goes back as far back as Adela knows with eGold. I think that, was eGold really the very first project that we saw for digital currency online? Yeah. We might have some video games, I think, but I can't even imagine anything other than Second Life, I think, with the Linden dollars, so I think eGold was about the first. This is Douglas Jackson, is that Douglas Jackson right there? Did you ever meet him? And I think in this picture it didn't come out. He has an ankle bracelet on, actually, which is kind of cool. But I don't think you see it there because it's a black bracelet. Was he a nice guy? Was he actually a cool person? So I don't know the whole story as well as Adela does, but the gist of eGold was in fact a centralized bank that issued registered securities, or even, I mean, they did issue bearer bonds, but they were, at the very least, there was a central depository with liabilities and assets. And these were controlled in a very bank-styled manner. And that was the first tokenized project on the internet. There was no blockchain back then. And from there, we saw a lot of video games, I want to say. So like Second Life was probably most famous amongst them. And Second Life did not use a blockchain. They had tokenized Linden dollars. Linden dollars took off. I think that they did have a secondary market even form for Linden dollars through like API. Is that how they made most of their money? I think Brock Pierce actually has like a history there with that. Say what? Interesting. Was that what it was? I knew he did something like that. Okay. So you can see these. You can see like these proto cryptocurrencies emerging before 2008, and it didn't really work out that well for most people. You had these little success stories, Linden dollars, but perhaps Rasa, for all I know. But generally what ended up happening is what happened to Douglas Jackson. Whether or not private currencies are legal, I still don't know the answer to that, despite your talk earlier suggesting that they are. It seems like what always happens, is that the efficiency that these products offer are some form of service to the underserved. That people use these currencies, even in these prototypical forms, because they abut the dollar. And this is as close and as proximate as they can get to the dollar, and it solves a solution for them. But the problem there is that in being underserved, you end up at foul with the regulations, and you start to ask questions like, well, why are they underserved? And the answer is, well, maybe they're kidnapping, or they're engaging in drugs, or they're in money laundering of all sizes and forms. So these services never scaled very large. And despite having a lot of the technology for tokenization and even digital currency, nobody ever cared. You guys weren't in a room like this back in 2005 because it wasn't actually that interesting until Bitcoin came around. And with Bitcoin, we had the blockchain. The most important thing to recognize is that what Bitcoin provided was a true bearer instrument online. So these were effectively registered assets and centralized assets. And with Bitcoin, you didn't have a place to send a subpoena. And it effectively scaled to the degree that I think eGold intended to scale, but didn't have the point of suffocation that you saw with eGold, where Douglas Jackson can be put on a ankle bracelet. And what I tell people a lot is if your blockchain has a mailing address, you're not going to have a good time. And that seems lost in a lot of the conversation. I affectionately refer to the function of blockchains as performing regulatory arbitrage, which means to perform regulatory compliance. But it's a bit of a play on words, because the way that you perform regulatory compliance is by offloading your liabilities onto this Rube Goldberg machine that is the blockchain, so that nobody can put an ankle bracelet on you. They can put an ankle bracelet on, well, nobody is the idea. And in doing so, they can comply with the law. You see regulatory arbitrage in a lot of forms. Uber is one such form of regulatory arbitrage. You can't run a taxi service, but what you can do is you can have a relationship with Uber in California, and there's a guy who is not a taxi driver despite providing taxi services. You see regulatory arbitrage in the cruise ships, where they will take you 50 miles offshore to gamble, but they won't do it within 50 miles offshore. And there's probably tons of these examples, even in the marijuana industry, of people who are complying with the law in very creative ways. So I think that whenever you look at these like pitches, you need to ask yourself too, where and why are people using bearer instruments? And as soon as you start to pivot from that in any kind of like a altcoin sense or a ICO sense, you're typically losing your efficiency in the market, because thus far at least, that is the only place that we've seen people who actually quote unquote need cryptocurrency. And to date, the only one that I think that really has mattered has been Bitcoin for this reason. One of the interesting things that I see with a lot of those alts are in fact Ponzi schemes. Maybe they're naturally Ponzi schemes. I think is what the IMF likes to call them, natural Ponzi's. But they are very Ponzi-ish. And the function of blockchain in a lot of those currencies and ICOs is merely to let the instigators of the Ponzi exit the Ponzi and offload the liabilities onto the community. So at some level, it seems like the function that blockchain serves isn't even needed for the core product and value proposition, but it is needed in order to reduce the liability that you see on the originators of the project, and reduce that liability by pushing it onto you for not only anything that you need to do in terms of the project development, but regulations thereafter. And like you see people like the BitShares guy, Dan Larimer, who does this just sequentially. He starts a project, he pumps it, he dumps it, he leaves it, he starts the next project. And the function of blockchain in almost all of those projects is to offload the bag onto the quote-unquote investors, most of the time who are noobs to Bitcoin or are here to get rich quick, thinking that they can repeat the success of Bitcoin. So I think that the history of Bitcoin needs to be mentioned. When it started, we were a bunch of weirdos. Like, we have at least one old timer, if not two or three, who remembers the old days. And the mentality at the time wasn't really getting rich quick. I think that there were, in hushed tones, like Murch's camp, for example, people thinking that they were ready for the reboot, like that this was the end of days for like the Federal Reserve, and that we will now be replacing it with a better version run by crypto anarchists and neckbeards and 16-year-olds. And that sort of mentality did have a bit of a pump to it, but I don't think that for a lot of those people, their vision was to go back to dollars. I think that for a lot of them, they thought this was the big one, and we're ready to just stay in Bitcoin forever and ever, and that's that. I think it's a little bit different than what you see now, which if you talk to like the average investor, they have an exit strategy at the time that they're buying a crypto. And I'm not saying that like the Bitcoin route is even superior, but I think that needs to be noted that it was a weird crowd. Like the inputs to this equation weren't something that were repeatable, measurable. It was a very strange time that I don't think we'll ever see repeated. I think that's part of that first mover advantage that we see for Bitcoin, and I think that part of the overall sentiment at the time, the inability for the market to really assess the value of this asset is a big part of why Bitcoin has been as successful as it has. I think when you set out to like repeat the success, I think you're necessarily unable to do so just by virtue of the fact that you are repeating an additional success, which isn't necessarily an academic argument for why these things can't work, but that does need to get noted. Nobody really in the early days had the surety of what they were doing. And like, I remember you go into a room and you say Bitcoin and like it was like a bad word and people clear out and like they think you're a total weirdo. And now, it's not as much the case. Now you can kind of say Bitcoin and like people don't like look at you weird. I didn't realize at the time that most money is in fact faith-based. You use that money because you have faith in that money being accepted elsewhere, and there's this weird sort of community acceptance. It's not exactly a religion, but it's something parallel to it. So when you go into a room and you say like, I don't believe in the dollar anymore, you become a pariah, because I think in your community culture now, you have like said, I don't believe in our mutually shared religious tenet or something like that, which I didn't realize as an early Bitcoiner. But part of that too is I think we all hung out together in like chat rooms and stuff, and we didn't socialize as much as most people. We went from that to where we are today, and I think that Bitcoin is in a weird spot today where there's like a valley of despair that I see because of a lot of the get-rich-quickers, and because of a lot of the people who thought that they were going to be either rebooted, and like here we are in our castles, not there yet, or they thought that they would be cashing out and buying yachts, not there yet. So I see right now that a lot of the industry is pivoting into what they want to be the next thing as they perceive it. So the next thing might be blockchain, as you see a lot, Ethereum, as you see a lot, governance, as in the case of Dash probably. A lot of people are looking to kind of score it out of the park the way like maybe Roger Ver did or some of the early guys did, and expecting these sort of like 10x, 100x returns and not seeing it. They are getting a little bit desperate, and I see that people are taking their Bitcoin and they're putting it into these speculative ventures more so than they probably were in years prior, because I think they're not satisfied with the growth of Bitcoin. What we see here, I see, is a very much a boiler room pump and dump culture that is formed, where people put money into Ethereum. You have a small amount of people that engage in this pump, regardless of what the technology would ever achieve. They were there to make some money. They got out at the top, and then it kind of built into a little bit more of a spiral. So when I look today, I see a lot of that in the space, and I don't see that part as necessarily very healthy. I do think that Bitcoin itself is actually as healthy a project as it's ever been. And I think that really needs to be addressed, because like this is the elephant in the room. Bitcoin is being used to buy marijuana every day, all the time. And in my country, if you don't have a dispensary in your state, the only way that you can get Bitcoin shipped to your door is by using Bitcoin. And it's a very polarizing opinion for people, because I don't think that they realize that regulatory support is one of the biggest things that we have going for us in this space. I know that everybody came here because they didn't like government. Everybody came here because they were ready to get rid of the government. But what we've seen, what the data is showing, is that the reason that people are using cryptocurrency is because they are cut off from traditional credit card services. So I think that the other parallel in the weed industry, and I bring this up with people, it's very polarizing, and you have to answer the question yourself, but back in the 1920s, Michael, when was marijuana made illegal? Was it 20s, 30s? So, yeah, okay, perfect. So when that happened, we had a hemp industry that was non-trivial in size here in this country. And the way I see it is that making that hemp illegal was a de facto subsidy for the cotton industry, which was significantly more successful given that less regulatory friction, given the preferred treatment for manufacture of textiles and all kinds of stuff that I don't even understand that it probably does these days. So I think in the same sense, the inability for companies online to use credit cards serves as a subsidy for Bitcoin use. And when I want to buy marijuana in my state, I have to go online and I have to buy it. I think that a lot of the studies that I see do show that this stuff comes out of legalized states. Not all of it, but a lot of it. So I don't know how that works, and I doubt Michael knows either, but there are people that are using Bitcoin every day for that function. Now, if we go back and look at how the alts are natural Ponzi's, you can really draw a lot of parallels to Bitcoin. You can say, well, Bitcoin was a natural Ponzi, and I'm very sympathetic to that now. I wasn't at the time when I started reading this stuff from like the IMF or Financial Times. I thought that was bogus. But I realized after seeing the pattern like a million times now from all these other currencies that in fact Bitcoin was a natural Ponzi at its start. That's what I would suggest. As I look at it and I see that we were first getting into it, it grew because we all put our money into it. And the capital inflows into the system was entirely speculative, which means that the only way that that thing would function, the only way the miners were going to receive enough money to burn energy was if we get more of our friends in to burn more and more energy, and we kept on bringing more capital into the system, which we did for a very long time. The difference with Bitcoin that I think applies to Bitcoin specifically and not to any other alt is that we formed a circular economy. We formed a need and a commerce-based economy that was able to displace the speculative capital inflow and replace it with utilitarian inflow. And at that point, Bitcoin went from being a natural Ponzi to being Bitcoin, whatever it is now. I still don't know. Bitcoin may still be a natural Ponzi. The dollar may be a natural Ponzi, and gold may be a natural Ponzi. But it seems like Bitcoin, at the very least, was becoming significantly more self-sustaining and significantly more differentiated than all of the other altcoins for this very one reason. It is a little weird because the entirety of that capital inflow requires government regulation. So I think as a lot of Bitcoiners, like seeing that we have a weird spot in our history now where we came from the reboot, we have to decide, what have we done? I find it great. I think it's great. I came in here because I bought something online that I couldn't get elsewhere. I received service as an underserved member. And for me, I definitely got caught up in the mania of 2012 and 13. But now as I look back at everything that's transpired, it seems to me that like in our basics, we are doing very well with this system. And I think that the other thing that's very interesting here, I hear a lot of the presenters talking, everybody wants people to take Bitcoin on the up, and that's fine. But the volatility and the friction that we have in Bitcoin is non-trivial. So if you're a company making, let's say, a 9% profit margin, you now have to, let's say, spend about 91% of your receipts or so on vendors, and the other 9% you get to keep for yourself. So you receive Bitcoin, let's say you receive 100% in Bitcoin, and that Bitcoin's worth, I don't know, $100 or something like that, or $100,000, whatever number you want. You now have to either give that Bitcoin back into your suppliers at a rate of 91% again of your total cost. That means your rent, that means your labor, that means all the things that go with it. Or you have to absorb the risk on the foreign exchange, which some companies will do for you, and that's pretty cool. But other companies won't. At the end of the day, what ends up happening is you will find that your profit margins at 9% will be very much impacted by the volatility of Bitcoin. And as a businessman, when you go into a business, you're selling hot dogs or something like this, you are trying to create a risk profile in the economy that represents your vendors and your clients, and you eke out profits there. You rely on all of the relative measures of scarcity between those to be more or less consistent. And if that gets disturbed, your 9% margins go out the window because you could end up having inflation or deflation killing your business completely. So when we go to people and we say we want them to take Bitcoin, there has to be a lot of friction for them to generally take Bitcoin over the alternative. So I'm a little skeptical that for the time being we'll be seeing Bitcoin being taken by above board dispensaries. It is possible. I think the way that it would be possible is if banks were to turn on like QR payments on their phone apps that pay in Bitcoin, which I do think may happen eventually. But until then, it's a very long, tough road to get there. But again, fortunately, what we see on the darknet markets are, in fact, what we want to see, where the 91% or so of your supporting costs are all paid in Bitcoin. So when I buy marijuana off of Ferris Bueller, I think is this guy's name on there, he pays his supplier in Bitcoin, and his supplier pays his supplier in Bitcoin, and the royalties on that site are paid in Bitcoin, and the programmers for that site receive Bitcoin, and all the way down until eventually it gets to probably like Mexico or Afghanistan or maybe Colorado even. At some point, like, there are guys that specialize in converting that into cash money for people who need it, but we're really starting to see the beginnings of its completely circular economy. I look a lot at the local Bitcoin volume because I think that's the best way to tell these things. And I see that countries like Russia and Mexico are at all-time highs of local Bitcoin fiat to Bitcoin pairing in exchange, which would suggest to me that a lot of the origins of a lot of these products in general are starting to see uptick in the circular economy capacity. And yes, they are exiting to some degree, but I think that they're actually keeping a lot of the money themselves, and I pay attention to that. I interview a lot of like darknet market people on the show, and I talk to them in private. And generally what I see is that they do keep Bitcoin as much as they can. They pay out their suppliers in Bitcoin as much as they can, and then if they absolutely have to, they'll use a local exchanger to get cash to people who won't take it. But the vast majority of Bitcoin is in fact circular, and it is self-contained. And I think that this one feature alone is what sets it apart from all of the other altcoins. So could an other alt come and replace Bitcoin, then, is the question. And that's what everybody's kind of banking on when they're looking at all of these speculative investments. You know, you have to kind of consider, I think, a number of things. First and foremost, these companies that show you a feature list, they don't show you a network of users. They show you a feature list. And they say they're going to build this out, and you're going to pay for it, and they offload all of the risk of the project onto you. They themselves treat this as if they were employees on a company. You are giving them your money, and they'll build this per the feature list that they've promised you. But generally, you're not even going to use it. Most of the time, you're going to keep the tokens you bought in your exchange, and you're going to never even use the software. You want to sell it to the greater fool, and maybe you'll find a greater fool, maybe you won't. But there isn't any circular economy, and there is generally nobody who needs this. There's mostly just a wish list of the developers who want to try out technology that they want to build for you and charge you for it and take no risk. It is very antithetical to not only the design of Bitcoin, but even all successful software projects. If you look at, certainly in the open source space, most great software is developed because it scratches somebody's itch, not because they were paid to do it. So that includes Apache and MySQL, just about every PHP thing that I can think of, Linux kernel itself, on and on and on. So the tendency for these ICO pitches to come and promise the moon seems to be inconsistent with all of the design principles that have brought success prior. I have seen a lot of insider stuff going on too, and I'm sure that, well, I'm not going to say his name because of the internet, but certain people in the audience who have exposure to this also see this. There's a lot of people in these ICOs that are engaging in very bad behavior. Not that I think that anybody should be held to a legal standard for this stuff, because I don't. That's not what I care about. But I have seen lots of people looking for off-exchange sales, front-running into the exchanges as exchange operators themselves. So companies like Beater, I think, is one, and I think Shapeshifter is another. I'm almost positive of that. And a few of these companies will negotiate with these ICO projects. They'll get the project leader to give them either free inventory or greatly reduced price inventory. They will then turn around and they will announce that they're supporting this on their exchange, and they will pump it up, and they will add marketing, and they'll sell it to you, the newbie of Bitcoin, to invest in, and that's typically where the dream goes to die as you hold it and you watch the project kind of stutter along from there. If you're lucky, you sell it at the right time. Most of the time you won't be. So it's very much a boiler room 2.0 style that I see happening in the altcoin space. I'm very, very skeptical. Of all of the altcoins that I've seen, I think only Dash and Monero were the only two to ever be supported officially by a darknet market. Dash is an interesting case because that started out as Darkcoin, and actually that was the first altcoin that I bought was Darkcoin. Yes. Was Shadowcoin another one that was listed on an exchange? Do you know which market supported Shadowcoin?
I know just one click has a wallet, they've got messaging security,
But do they have? So they have their own like built-in dark market, right? Right. So I don't know. I guess that would be a special case. That does seem to be like a new trend that I've seen some people talking about. Like Ethereum has something like that now. I'm writing Drop Zone as well myself, which is something kind of similar but with Bitcoin. But to date, I think that for all of the volume that we've seen, very, 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 very little has gone through something like Shadow Cash. Like I'm guessing, do you know of any sales that happen or what the sales volumes are on those networks? But the trading wouldn't necessarily show you what who needs that for purchasing. I would say like good sales, like how many actual products were sold with Shadow Cash's, Open Bazaar-esque model. Like that would be the number you want to look at. My guess would be very, very little. Okay, so we'll see if that develops, but I'm very skeptical. Again, you now have too, for the case of like Shadow Cash, you have all of these suppliers that are invested now in the darknet market. Like these are people that have been doing it every day for years, and they have savings in Bitcoin, and they themselves are very much partial to their savings being as relevant as possible. And when Shadow Cash comes, they're effectively asking them to cannibalize their existing stored value for the sake of this experimental project, which maybe they'll do that, but thus far I have not seen that to be terribly successful. And like the Darkcoin was one. So you have a Dash shirt on. Dash is a rebrand of Darkcoin. In the early days, Darkcoin was designed for the darknet markets. And it started out under very shady terms. That's a whole other conversation. It grew, and it then started to fizzle out, at which point Evan Duffield, the project manager, decided to rebrand the project to the newest sort of boogeyman of the day, which I thought was governance. And he rebranded to Dashcoin. With little support they had in the darknet markets, faded completely already at that point, and now they're just rebranding under Dash, and they're kind of remarketing it in that capacity. Monero is a relatively new one that's being taken by, well, it was being taken by Dream, but Dream just exit scammed, and so now it's being taken by Alphabay. I hear that some people actually are buying with that, so that is interesting. I think Monero isn't something that you should buy. I don't know that it goes so far as to say it's a scam. I don't think there's any value in purchasing Monero. I know the project lead very well, and he's doing good science, I will say that. But I think that ultimately he has a very poor chance of staying relevant on these darknet markets. Time will tell on that. But certainly, thus far, that proposition has not met well with results from these alts. So yeah, I think on that, sorry. Went off the script a second here. Oh, wait. Sure. Yeah.
So isn't it kind of cool that Dash could rebrand where the nationalists had to vote and they all decided they want to change, even though Evan did control a lot of the areas, they were able to do that. People that all like that.
I mean, if you think that's pretty cool, that's certainly their pitch. With the case of Bitcoin, like there's no centralization, so maybe it's pretty cool that Bitcoin can't do that, would be what I would argue. You should ask yourself why there's so much like centralized leadership there, which is a fine enough question to ask. In the case of Bitcoin, it's like very anarchic in its structure. And at Bitcoin, nothing easy happens because there's a lot of interest there. With like Dash, there's just not a lot of interest there, so it's very easy to make big changes. You see this with like Ethereum now, where they can make huge changes to the code, so much so that like they can blacklist addresses. And the reason why is because no one's running their business on it. It's all speculators. So I would say Dash has the same thing. So maybe that's cool, but I think that any of those sort of decisions in Bitcoin would be impossible, and not just because the Bitcoin governance has all the incentives it has, but because there's an actual economy that would be extremely sensitive to that need and would leave the coin entirely if the community promise was broken, would be my answer to that. Although, how the hell do I start this damn thing? Hold on. Sorry, guys. Hold on. I think I'm in edit mode. Okay, thank you. This computer's been a pain in the ass all day. So, yeah, I think that what you need to really look at is what are users doing that need the software. Like if you really want to speculate on what these coins are, what these pitches are, you got to look and see where users are going. Where I see users hanging out the most is certainly local Bitcoin trading and ATM machines. The ATM machines are exclusively Bitcoin. Local Bitcoin is actually really interesting because they service more than what you'd think. And if anyone who's like a Bitcoiner who hasn't gone on local Bitcoin in a while, you should go and see. There's like two tiers of like site operation if you're like a beginner, I think, and then after a point you get a more exposure based on like your reviews and your reputation. But what's really cool about local Bitcoin is they have all of these amazing pairings, everything from every gift card you can think of to like, I think, what precious metals. Did we have a local Bitcoin guy here earlier? I think we had a couple. Aren't you? Yeah. So have you seen all of the pairings that they have right now? They have like everything from like Panera Bread cards. Right. Whole Food? Yeah, Whole Foods like a notorious one. Everybody, that takes like a very hard one to accept, right? They're like, there's a lot of buys, there's a lot of sells on Whole Food cards and nobody wants to buy it. Is that what the pairing is like? You shaking your head? Am I right about that? Yeah. It became one of the cheapest what? Right. Right. Okay. So Bailey, you should probably pay attention to this because this is a big story that I don't think anyone's reporting. So. Yeah. Okay. That's awesome. So, okay, all the local Bitcoin guys know this esoteric knowledge, and if you don't know this, like, you really got to understand it. So certain like gift cards are, I don't exactly understand it, but I think that they're a little bit more, they have less risk to redeem. So like, I think that the way it works is like Amazon, for example, trades at a premium over the dollar. So like, what's an Amazon card? It's like $101 for like a $100 Amazon card. Is that about right? Wait, say it again? Yeah. $800 per, like what? For one, okay, right, for one BTC, right. So there's a huge premium. Right. And I think I'm probably going to butcher this, so feel free to correct me. But I think that there's very low risk for somebody who buys an Amazon card because they can like spend it immediately when they get it. They don't have to hold it, so you don't have to worry about a double spend. And then I think on top of that, like you can do all kinds of amazing things that you can buy and convert it into paper money. So like I'm not going to repeat some people's strategies that I told them I wouldn't, but people are very, very creative. They'll buy stuff and get almost 100% of what they purchased in paper money at the end of the day. Yeah. Yeah, tell us. The stuff that people are doing to route value around is just amazing on local Bitcoin. So I think that with like Panera Bread, like nobody wants Panera Bread cards because like you can't take a Panera Bread card and buy like a sandwich and then turn around and resell it and get paper money for it. So like, and the Whole Foods is kind of similar. I think what you could do with Whole Foods maybe is go in and buy like wine or something like that and then maybe sell that somewhere. Whiskey, is that what it is? Right, so there are people who work at Whole Foods. Like they don't work for Whole Foods, but they work at Whole Foods and they sit there and they trade Bitcoin and they get a Whole Foods card, they get the whiskey and they ring it up at the front desk and then they go back to their little seat and they sit there and that's their job. And these are the types of things that people are doing online with cryptocurrency in part and in routing value around the economy. Now, I don't actually even know what cryptocurrencies is local Bitcoin supporting currently. Yeah, besides Bitcoin. They support just Bitcoin. I thought they have Monero or something now. Ethereum? They do Ethereum? Okay. And what else do they do? Okay. Okay. So that's where you want to look. So if Ethereum's on there, I mean, that would be an actual like positive signal for ETH, even though I'm very bearish about that project start to finish. But like real users hang out on local Bitcoin. And if you want to know what real people are doing because they need to use cryptocurrency, that's one place that you will find it. So when I see people like Dash people that are like completely disassociated from like the needs of cryptocurrency users, I'm very, very skeptical that those people know as investors what's moving these economies. And I would guess with Ether, they don't really have as many pairings. Like I'm guessing they just do BTC to ETH. They don't do like, do they do Amazon to ETH or anything? Okay, yeah. Okay, that makes sense. Right. Right. I think Apple products are also like pretty good premiums. No, like people can just turn around and sell a MacBook for a phone or something like that for almost face value or more, given a gift card or something like that. At the end of the day, I think a lot of those people just want dollars. It's one of the reasons why I think ATMs are here to stay is because it's better than the alternative for a lot of like regulatory efforts. And not only because I think that there's not a lot of supervision on local Bitcoin, but also because they're generally safer. Like we have a lot of like stabbings in Florida from local Bitcoin guys, And when you have a Bitcoin ATM, we don't have that. You have that problem? Nobody? Yeah. Yeah, good. I would love, off the camera, I would love to hear some of your stories. I bet you they're wonderful. The local Bitcoin guys are like the heroes of the movement. They're unsung, they're amazing, and the forums even on local Bitcoins are pretty cool too. There's some wild stuff that goes on down in there. But yeah, all of this stuff is completely tangential to, I think, what the promise of ICOs and alts are. And generally what I see here is that almost all functions in the space happen because people are abutting the dollar as close as they can get to the dollar. And I think that what you see with Bitcoin is that all of the first mover advantage stuff, the size of the economy, as we heard from here today, the volumes that you see in Bitcoin are just astronomical. And it is very hard to keep prices at an efficient level of discovery when you have all of these alts that are just really just fantasies in my mind at the end of the day. What I also think is very important is checking out like where the gambling's being done. Nitrogen Sports and Five Dimes, Big Casino, a bunch of these guys, those are all Bitcoin only. In my country, if you want to gamble at home, you have to use Bitcoin. The government requires that we use Bitcoin to do gambling. And so it is conceivable that we could use another coin, but I just don't see that anywhere other than at these sites, and they only are taking Bitcoin. So when you invest in an alt, you're typically divesting yourself from your Bitcoin to give to somebody else who actually is going to use that so that you can take the risk of their science experiment, which has yet to come to fruition. Backpage is another one. Backpage actually accepted Litecoin for a short period of time, and that was kind of a failed thing. Although I talked to the Paxful guys, I think that they're open to Litecoin again, but it's just the liquidity there is very low. I think it's very hard for them to work with. Yeah, so I think it's worth talking about the types of scammers too in this context. You know, when I first came here, I didn't realize, I always thought scamming was an intent-based thing. I thought that you went into a situation knowing you were going to scam people. And I think that that's a big hurdle for a lot of people. I think a lot of people come and they see like our show and they're like, well, you know, this guy made a simple mistake. And they're right, the guy did make a simple mistake. But what I find is that most scammers, 90% of them, probably more, had nothing but the best intentions the entire time. And you see this even in extreme cases like Paycoin. Paycoin truly believed that they could keep a price floor in effect for perpetuity without realizing that people could turn around and just completely, I forgot how that scam worked. There's a memo that leaked, and it's not fresh in my mind, where Josh Garza realized that with the price floor, you could sell it to yourself at a loss and bankrupt the company. I forgot how he figured it out. He had no idea that that was an unsustainable promise, and he had nothing but the best intentions. And of course, Paycoin was a major explosion. I think the DAO is another great example. You have Griff Grant, I think, or Griff Green. He came here to make the happiest project in the world, and sure enough, he exploded everybody's money, and everybody lost it. And he scammed them, and he scammed them through ignorance, not through intent. So it's rare for you to find somebody who really sets out to hurt people with their scams. Yeah. So the question for the online audience was whether or not I'm shorting any of these currencies, and I'm not. But the history of my Bitcoin speculation has been I bought Darkcoin in the early days, and I actually had a very non-trivial amount. And if you look at the big pump, I realized how shallow the economy was, and frankly how bad the proposition was. And I sold it, and by doing so, the entirety of the market, I sold out all of the order books, and the whole market crashed. And I don't know if it's recovered now, but that was right at its apex, and I was basically the guy that did that. I have some counterparty XCP, nothing substantial, that I've been using as I can, and I've not been speculating on. And that's a public address. You can see it. There's an asset named Chris DeRose that has my money attached to it. And so that is something that I own. And I'm not shorting anything at this point. I've been robbed a few times. I was robbed by the same guy who robbed BitPay out of their $1.2 million. Not for nearly that much money, but on the same day as part of the same scam. And that was fun. I don't know if that answers your question, but that was one of my scammings. I think any old Bitcoiner here can have some kind of story along those lines. But no, I'm not actually a shill trying to manipulate markets with this talk. You can try to bust me on that. I'd be very, very happy if somebody tried and published some scandal that I know that doesn't exist. So I think that I think that what you have at some level is very comparable to like a perpetual motion pitch with a lot of these guys. Like they don't know the science well enough to know that what they're advocating requires a non-speculative capital inflow into their project. And so they pitch these perpetual motion machines, not knowing that there's like energy that has to come into it in a circular route of some kind. And people want to let them off the hook, guys like Dan Larimer, because they think that they had the best of intentions. But in my experience, it's the best of intentions that often cause scams. I think that that's why we have a regulatory environment the way that we do. I think that at some level, through our organic means, we've evolved all of these rules to protect us from people's own ignorance, not so much even their their maliciousness. And it's very hard for the noobs to understand that. So you guys some of you are going to find like leaders in the form of like Vitalik, he's a crazy person, and I've known him since before Ethereum. He's another discussion. You're going to find leaders in guys like Evan Duffield, maybe, because they're nice guys. Griff Green, they're like nice guys. But the problem is that they're grossly incompetent for the promises that they're making. And so that's one thing that I think needs to be kept in mind with scammers is that like they should be held accountable, not in the form of like going to jail, but in the form of like being allowed to do successive pumps when they've just demonstrated a complete lack of competency on their last pump. And one thing I will also say too about the space that I see in a lot of these scams, communities do a really phenomenal job of censoring themselves. I've seen this over and over and over again. If you have a opinion about a project that is antithetical to the core goals, they will take you out of the community. I see that with Ethereum, I see that with Dash. You ask a good question and you are censored. They get you right out of there. Always be on the lookout for that in like your scam investments, because one thing I will say about Monero that I do like is I've yet to see that culture form there. And that is in part, I think, the work of Fluffy Pony. He's running a pretty good project in that sense. Again, I don't recommend anyone investing in Monero, but what I have seen is that the culture there is at least very skeptical and very accommodating of people with skeptical views. So yeah, we have, I think, let's see, the next slide. Yeah. I want to talk to you a little bit about the state of blockchain. I think some of you have made comments about how you like blockchain. I'm very skeptical of blockchain in general. What I saw with blockchain was a lot of people who came into the space for Bitcoin, and for one reason or another, either they realized that like Bitcoin isn't a thing that most companies need, in the same way that like gold isn't a thing that most companies need, or they realized that some companies do need gold, but they don't want anything to do with those companies. Companies like Alphabet and Nitrogen Sports. So a lot of people kind of rushed into blockchain as their pivot, and that's like kind of a pump that I think we're starting to see end. It seems like the proposition of blockchain is that it is the technology behind Bitcoin, whatever that may be. And that could be as simple as like public key signature techniques, or it could be as simple as like peer-to-peer networking or append-only databases. It's never proof of work, because that's the hard part, even though Satoshi's definition of blockchain was entirely predicated on proof of work. I think that almost the entirety of the blockchain space is filled with scams at this point. I think Tyrion might be an exception, and you can't invest in it, nor would I tell you to. They're doing like blockchain-based notarization, but the vast majority of stuff that you see, R3, Hyperledger, certainly, Symbiont, et cetera, these are poorly thought out projects that are not going to return money for their investors. And there's not been a single success story to date that I've found in the blockchain industry. I think that a lot of people were pivoting there. Again, a lot of them were bankers trying to find the next big thing, with the belief that they could make success to the degree that we saw with Bitcoin. And that seems to be kind of like breaking up now. And I think that like the pitch of blockchain has been reduced to like folders, that you can transmit folders in a network or something, which is very inane to me. And also we've had like that ability forever. So it's starting to dissipate. And then the same crowd is now pivoting. Yeah.
So you've got the investors, huge move of capital to build this grand scale thing, like it doesn't turn out to be what everyone plans. The value of that project is bottoms out. It doesn't go away. It's around so many people are just kind of could we possibly have a lot of different projects out there that are kind of
I mean, I think the question is like, what, in blockchain itself, or like in the altcoins as a space, entirety? Yeah, no, I mean that's definitely possible. I think that the culture of getting rich has made it so that it's a very improbable proposition at this point that you can have a fundraising scenario produce anything fruitful. I think that if we have a success, it's going to be somebody who is not doing it for the money, who just creates it with no profit expectation because it scratches his itch. That's what I would say. I think that as soon as these people start announcing that they're going to like take your money, it's because they know that it's not scratching their itch, which then begs the question of what's happening. The other thing that's kind of weird, I think, that gets into that is that like I think that there's this pervasive knowledge of the wisdom of the crowd being like the smarter wisdom, and there's a lot of times when that's true. That does not appear to be true with investing, though, and that does not always appear to be true with, I think, a lot of the blockchain propositions. You have these people that are offering solutions to a completely unqualified audience, and they can't tell that this is a perpetual motion scheme. Or like, for example, Vitalik. I love this example. Vitalik, just before he did Ethereum, was proposing quantum mining, and rather famously even by somebody in the audience here today, a person came up, raised this question and said, well, if you invent a quantum miner, doesn't that destroy the value proposition of mining? Who would you sell it to, seeing that you broke the security feature of Bitcoin? Vitalik, of course, didn't have an answer to that. Vitalik, I don't think even knew that what he was proposing was a solution to like the P equals NP problem, which is a very complicated computer science project. But he was willing, He was willing to solve it for you for a fee, despite having no qualifications in that space, and not even knowing that that was what he was proposing at the time. And that was like a month before he started Ethereum, maybe 2. So I'm very skeptical about that form of project management. I think that what it rewards are like these clueless people more so than you get like the brash and like the sort of arrogant that I think are the ones that come to leadership positions with those models, and those people I don't think have the specialization or the competency to run a development project as complicated as they pitch by a long shot. So that would be my short answer. Yeah, that was my last slide here. Yeah, so I think that despite a lot of the people that are like here that are frustrated about like maybe the lack of progress as they perceive it, I think Bitcoin is absolutely amazing. When people listen to my show, what I hope that they understand is that despite like a lot of the skepticism that we have, underlying that skepticism is the belief that Bitcoin is working. And I see this in many different ways. I see this like when I interviewed a kid who's a gamer, and he does professional gaming, and he doesn't like know that there's like he's like a 19-year-old. Bitcoin's been around since he was a 13-year-old, and he doesn't even know that there's like a libertarian movement with Bitcoin. He doesn't know that like there's people in a room that talk about Bitcoin. He just thinks it's like a way to send money online. I think he thinks it's a company, and he's not going to like listen to our podcast or engage in a debate or whatever. It just solves his problem. And he's a young kid. He sends money to other young kids. They can't get bank accounts, so they use Bitcoin. We see humongous successes in the space. A lot of them are darknet markets, casinos. We have Backpage as well. And I think that malware as well. I think that people don't like those successes, and there's a lot of like judgment and prejudice about that success. I think that they wanted to see success at a different level where like they made friends. And I don't think that they were owed that, and those people can leave as far as I'm concerned. They can stay and they can like, embrace it because of the obvious success, if you ask me. I think that the other thing that's absolutely spectacular about Bitcoin is specialization of labor. Not enough people are doing stories on this, and it's the real story of Bitcoin. If I wanted to run a darknet market, or I wanted to run a gambling operation, or I wanted to even just run a benign thing for 16-year-olds, I used to not be able to do that because all of my time would be spent converting money into the forms needed to pay off vendors and to receive from customers. I had to run all of my banking operations in-house. But now with Bitcoin, like you can create this circular economy, and you can just send Bitcoin to the guy who specializes in, writing like this little piece of malware, writing the user interface for the malware, servicing a call center in Brazil to help people by phone when they get attacked. You see all these people now forming very specialized services and increasing their like economic output. You may think that it's not towards an end that you want, and that's a conversation that we can have, but at the very least, Bitcoin is achieving that. And personally, I think that like in the case of malware, I think that what you'll find is that specialization of labor in the malware industry will probably make Windows an increasingly expensive operating system to run, which ultimately I think is an aggregate efficiency. I don't think that there ever was a reason to run very, very secure software until Bitcoin. Through specialization of labor, we'll probably see more Mac and Linux users, which I think is cool. Of course, you have the same arguments with drugs. Like you can say that you don't like Bitcoin being used for drugs, but then here we are in Colorado where weed's being legalized, and like, is this a better way to go? Are there fewer externalities? If that's the case, then fine. Like reduce the subsidy for Bitcoin and let people do that. If you believe that this is an efficiency that we're targeting, whatever your ideology is, you should be okay with that, because like we will end up where you think we belong if you're right. And if you're wrong, then you're wrong. So deal with that too. I think that the cool part about Bitcoin is that it is very much a science fiction project where like you're talking about Blade Runner, where people are, trading like chits and cards of value, and they're dealing with this sort of underworld thing. And the only way that you can have, I think, a circular economy in the space is going to be in that context. I think that those people are using Bitcoin because it abuts the dollar. I do think that the dollar, and this was not an opinion I had when I came here, I think that the dollar is a very wonderful tool. And not for the reasons that people generally think, but registered value seems to be like a wonderful thing for people. It lets us earn money at ways that we can't earn money. You see this in like Venezuela, where people are like stuck hoarding like paper dollars under the mattress. Like that's a bearer asset of a kind. They can't reinvest that into the economy. They can't make money on that in any capacity. And so I think that like Bitcoin's probably going to have all of those problems. It'll always end up abutting the dollar. And I think that any of these projects that think that they can change that are very much misaligned with what we're seeing in the field in terms of like usage of these tools. I would suggest that like you really need to identify ideology in your life. I've seen that the scammers generally take advantage of that. If you have like ideology, like a faith-based thought that isn't necessarily backed by any form of analysis, if this is like a goal that you have that is like a, I don't know, cultural goal that you have, or just something that you aspire to be, that's usually where the scammers will like have leverage. So like with Ethereum, I think middlemen was like a big thing, the boogeyman that they identified that they were going to save you from. That's usually what the scammers tend to fall into in terms of taking advantage of you. And it's usually greed, either monetarily, primarily, or even in an ideological sense. So there's a lot of us want to hear certain things, and like we're willing to like lose money for the sake of hearing that thing can be solved. And that seems to be how the scammers separate you from your money. Oftentimes it's pure greed. Like we see that with anything from like Dogecoin, ironically, to, Ripple, Ether, which one? Paycoin, 100% Paycoin, yeah. Yeah, exactly. It's funny. I don't think so. You got to look at like your longitudinal returns, and I think that it's pretty certain at this point that if you put your money into the dollar, into like an interest-bearing account, let's say VTI, VOO, like an index of the U.S. stock market, you're going to return value in a sense that doubles your money every 7.5 years. So they weren't practicing the Bogle method of investing, which, yeah. They were probably scammed by their financial advisors, who should have told them to put more of their money in bonds. I mean, you get, yeah. Well, they should be mostly in bonds at that age. The basics of finance are such that stocks are more volatile, but higher returning. It was he a VP of like retail banking sales, because he was a salesperson. That's a big scandal. Like John Oliver's been talking about a lot of this. Like financial planners right now are not in a particularly good spot. Like robo-advisors are really good. And like anybody who has money that wants to invest, if you want to double your money every 7.5 years, throw it into Betterment, put in their aggressive option. You won't do it with certainty this 7.5 years, but if you take the average annualized return, that is what you'll have over the course of your lifetime. And so like, is that a scam? Like, I think it is a free lunch. I do. And that should resonate with you as a scam, always. There's a number of economists, and this is a big issue. Like we have Eugene Fama on our show to talk about this with us in part. I'm trying to get Jack Bogle on. It's a long shot. But yeah, it may be that indexing is a free lunch, and that may not scale. And there's a big national dialogue that's happening amongst many economists. But what I can tell you with certainty is that at any point in the previous 80 years or so, maybe 50 years since the S&P really started, if you invest in a broad-based index of U.S. the top 500 performing U.S. stocks, you will be doubling your money every 7.5 years. And for the people that lost their money, they were probably overexposed to risk in the stock market sector and not into the bond sector, and that's why they lost that money. And they should have known, but.
So something to add here. So if you're, I like the fact that you brought up good intentions a little bit. So
Yeah.
Because this really resonates with Carl Menger. If you're familiar with subjective value theory, and
Okay.
you're familiar with asymmetric information, there's always going to be asymmetric information in your marketplace. So if there are people who are with good intentions trying to build tools that other people somehow hypervalue from them and get money, to call that a scam, I think that there's subjective value in the marketplace and asymmetric information. And if you think that's an ideology, regulators trying to control this is just as much of an ideology as what happened with the picture like the license in New York. Where did that happen?
Lawski.
Yeah,
Right.
So he went off and to benefit from regulation he threw in place. That's an ideology to believe that regulation will in fact save you from this type of human behavior.
So, I mean, there's a lot of stuff in there. Like that, you could have an entire hour-long panel on those thoughts. No, it's okay. I mean, there's a lot of like economic thought here, and there's a lot of very good arguments, most of which I can only cite other economists on. What I will say is that it is my belief that deep markets are efficient, and that typically what you find are shallow markets. So like in the case of like Ben Lawsky, the market for Bitcoin regulation was inordinately shallow. And so like what you'll find are like these inefficiencies in price discovery that probably didn't achieve an aggregate efficiency. And we know that because there's no Bitcoin businesses there. So that is a scandal, but that is the kind of scandal that you see in shallow markets. And what I would suggest is that the larger the market, the more information will be reflected in price discovery.
So I'm not familiar with the terminology in terms of shallow and depth.
Yeah.
New York arguably is a fairly large economy. And
It's not the New York economy that you would look at, it's the regulatory economy. How big is the economy for regulation of Bitcoin, which is very small. Even though the state economy, and this is always hard, the context of economics. Yeah, so I would say that's, and shallow versus depth is like, I don't know, maybe get the Bitfinex guy to have his point of view. Like I would define a deep economy as having a very narrow bid-ask spread, but there's clearly a volume component to it as well. So how would you define the depth of a market? It is. If you look at the papers published on this from like economists, these papers are astoundingly difficult in their math. And I don't think anybody knows the answer to this really. But what you can say is that like the market, for example, for, I don't know, little plastic cups is pretty large compared to the market for Bitcoin wallets. Like you can kind of have these big sweeping generalizations that are in fact pretty good as a rough basis, because I don't know how many Bitcoin wallets were like downloaded, but it's significantly fewer than the number of paper or styrofoam cups, which means that the efficiency of a styrofoam cup here is like extraordinary. Every single iota of this cup is probably measured. The red coloring is probably the cheapest you'll find in the world. The plastic is probably, I don't know, super strong given the material costs. And the size of this cup probably reflects like consumer sentiment to the max. So I'm guessing this is like 8 ounces or something based on like years and years and years and years of research into what consumers like to drink in their disposable cup products. Whereas like Mycelium is a fine enough wallet, but like there's 4 wallets out there. So like there's not that kind of thought put into it. And like if Rasa has like a brain fart one day, it stands a good chance of getting in. Whereas I'm sure nobody at like this company can like make a change to this product without going through an inordinate amount of like R&D or like, you know, empirical studies to support that. So I think that when it comes to a lot of these, like whenever I talk about people about like market efficiency, it's usually that you'll find exceptions where price discovery is inefficient. So I believe that like Mycelium is going to have a less efficient product given the demands of the market because it's small. Like not that you guys are deficient, but like any Bitcoin wallet would be, because there's not enough data points, there's not enough effort, there's not enough studies, there's not enough money in that market. And you'll find some inefficiencies there. And I think that's what you see like in the bit license. What you found is something that probably was an obvious inefficiency, but since there was literally nothing before it, like nobody's doing any sort of price discovery in that market for the regulation of Bitcoin licensing, which I think that probably makes Ross's blood boil because he hates that governments compete at some level, or at least like thinking about that. But I see governments competing, so like you can take from that if you want to. Do governments compete in their regulation for Bitcoin licensing? So does the state of Florida compete with New York for Bitcoin businesses and its licensing? Not efficiently, absolutely not efficiently. That is for sure. The other thing with like law and like government that I think people don't like to hear, but I believe the government exists to normalize risk. And in a lot of ways, what that means is that it prohibits progress. Like the function of government to perform a macroeconomic efficiency is to restrict the growth of industry. So it's like sometimes we have like crazy industries, like, I don't know, maybe self-driving cars is one. Like if the government didn't restrict that industry, it may be that we have more civilians die every year. So it could be said that inefficiency in governance is in fact to retard the development of that industry to a degree that ensures that technology only comes out when it's ready. And like you see that in finance to the max. There's a lot of systemic risk in financial products, and so you'll see governments retard growth probably through pure accident in terms of like the intent. But I think in no uncertain terms, through their withholding of progress, they're able to get a little bit more information on things before they let things go out the door. So when you see government do weird things sometimes, like you look at that and you are specialized, so you know that was a stupid decision. But given their level of specialization and the amount of like money that they have to do R&D, that was probably very reasonable, because even if it retards growth in this one particular time, it also expands like security 9 times out of 10, maybe. It's a very farty thought, but it seems to be where I'm at. So yeah, I think that's most of this presentation here. I think that one other thing that is very, very important, I believe that mining is a zero-sum game. I think that even to a degree, like commerce is probably a zero-sum game in the Bitcoin world. And you see this in the form of miners who mine an altcoin only so that they could sell it for Bitcoin. Like they want Bitcoin. So they are selling your altcoin to you because you have this ideology. They themselves are in the business of mining to greater fools, and they'll take Bitcoin. That's fairly typical. And I think that for any coins that do succeed like Monero, they're taking away from the success of Bitcoin. Which the reason that I think that matters is just that most people understand that like these alts are all competing. Yeah, well, you first and then you.
I'm curious, is this because there are groups like we talked about earlier today who are on the Bitcoin, they talk about it, and there's no way that a group could do that in Bitcoin to the same effect as it's on smaller level.
Yes.
I don't entirely believe this is a zero-sum game because I think those
I agree with that.
alts are,
So to be clear, I think that it's a zero-sum game in terms of the non-speculative function. I think in the speculative function, yeah. And there's a time when you get people into the space because they wanted to invest in ideology and it failed, and then they come to Bitcoin, and then there's times when they like come to the space and then they leave and you never see them again because they lost their money.
what percentage of even Ethereum would you see as speculation versus
Ethereum is 100% speculation. Yeah.
So all these other alts are all very much speculation, and so I don't think it's entirely zero-sum because if people are going with what they have a small market cap, can get that same volatility and just have those people do where Bitcoin, it doesn't matter what we do unless we go back to $1 billion market cap.
I agree. I don't disagree with any of that. So I would clarify that yes, I think that the speculative, which I've seen, is that you saw a lot of people come into the space that did not cannibalize from their Bitcoin position at all to invest in Ethereum. And that being said, I don't see that in the utility side. I don't see people using Ethereum for anything. So I think that the only time you see that is when people are like looking to get scammed, basically, by buying something that is a natural Ponzi, which is fine. Because I think that as soon as you hit the rubber hits the road where you're going to actually now start being used, that means that you're fighting with the other cryptocurrencies in the utilitarian sense, which is what I would believe. And I think that you see that, again, in many different ways. If somebody buys something on a darknet market with Monero, that comes out of the Bitcoin success side. So I think that it is a zero-sum game. And the reason I think that's important is because as a first mover advantage, what you'll probably find is that we have the same problem we have with dollars with these alts, where like you've gotten a group of people sold on Bitcoin because it abuts the dollar most closely. Now you want to get them to abut the thing that abuts the thing that abuts the dollar. And I think that is a significantly more difficult proposition, which I'm skeptical will work. So, I don't want this to even be a pump thing for Bitcoin. So for anybody here who is brand new to Bitcoin, don't buy Bitcoin unless you need it, and then buy it, and then that's cool. And like, I hate, at this point in my Bitcoining, I hate to like pump because I just don't, it's just not fun for me. So like, I think that what you should look for is, if you're going to invest, find out what the utility is, but more so than that, just like put your money in like the stock market in a very safe investment, something that's like low risk, well-managed, VOO, and then just like use Bitcoin because it solves your problems and explore the space from there. I think that's a lot more sustainable and you won't get scammed, at least over a longitudinal basis. I know you don't like that over there. Would you have, Adela? Oh, yeah. Yeah, of course. So I kind of am fairly well known for having gone into this OneCoin scam, and these are just run-of-the-mill MLMs. OneCoin is not a cryptocurrency. It is a centralized bank. They issue liabilities and they collect your deposits. It is mired with nonsense, and yeah. I mean, they will tell you that you have this much in their bank. The thing about OneCoin is it's just lies on paper. Like that, like you try to reason through it, it gets really funny. If I were going to run a scam, I would run like a OneCoin kind of scam, certainly. What's going to be interesting about OneCoin is if they explode completely, which I think is likely the case, or if they use a blockchain to hand over their liability to the community, and they say, like, we are done, we have now turned this over to the community, and OneCoin is now the public blockchain that you can all benefit from, goodbye. Oh, yeah, right, exactly. There's no price discovery on OneCoin currently. There's no market for it. It's just a bank that shows you numbers. It's really asinine. So we don't really know how that'll go under. I think they'll go under by the end of the year because they're just straight up Ponzi in the classic sense. But yeah, I mean, the thing that I think is interesting is that here you have a bunch of people that are literally investing in cryptocurrency for the first time. That is what's been marketed to them, is that this is the better way to get rich than Bitcoin. They came in, now they're holding OneCoin. These are guys like OneCoin Bob, who comes out to my meeting all the time, who believes that he has like $1 million in OneCoin. We all know he doesn't, except for him. He's gonna lose that money, and I don't know what he'll do next. Like he may get into Bitcoin, he probably won't, we'll probably just never see him again. But the pattern will repeat. There will be another OneCoin. There'll be a 2Coin or something like that thereafter. What else we got in the channel? Any more questions? Any more questions from the audience? Yeah. Okay. Well. Yeah. Why do I pump S&P? Say it again. I do pump S&P 500. I think because I don't want it on my conscience that I told somebody to buy Bitcoin and then have to listen to them like, a month later. Well, the S&P I'm significantly like more sure. Say it again? Yes. Well, you know what I think the secret is about the S&P is if it doesn't perform, then like this is like scorched earth and you're never going to see me again anyways. We'll all be like living in tents. So like I can't lose that bet there. Well, if Bitcoin fails, like you guys all know where to get a hold of me, and I'll have to answer hard questions. With what? Like I know that has happened before. There's been a lot of times I've told people not to buy Bitcoin, and then like now, like it's been like doubled or something in the last 8 months, and they're like, "Why you told me not to buy Bitcoin?" And it's like, I can't win. I know this, so I don't have good answers for you. I think I just try my best not to be a pumper, but like no matter what, you're going to find an exception there. I guess it's hard. Sorry, say that one more time?
If there's another 2008 event,
yeah,
it might be a nice hedge.
Certainly.
Right now, they're pumping so much money in the economy, both the bonds and the PEs are out of control, that if you were to go to the traditional financial advisor, they're all going to push you like London in the same direction.
But that risk is reflected in the price. Like you say that's out of control, but like the market is reflecting that risk. So how do you value? But so sorry, it's hard for me to hear over here because I've got somebody. Say it again.
If the risk is reflected in the price, then a high price is reflecting a very high risk, and that risk itself suggests that that should correction.
I mean, that's fine enough. I mean, I think that right. I know that the risk being reflected in the price is work. Yes. Yeah, Ross, you want to come over here? You know what? The question is, if the price reflects the risk, then does the high P to E ratio not reflect increased risk in the market?
Wait, somebody wants me to repeat what I said? Yeah, he said that the risk is already reflected in the price. I just said that it goes both ways, that if the price is really high and reflecting the risk, then it is actually showing that there is a lot of risk in that, and that risk does mean that it's risky. It could crash. So, what? What else is the price then? We're talking about S&P 500 or something else? Okay, because I'm talking about the S&P 500 here. I have a question for you.
So the PDE ratio being high is obviously interesting, and we're actually at a level that I think is fairly significant, even in like a historical context. I think that when you would look at it for the risk of like economic like meltdown, would be more of like a government bond type of PDE sort of metric, more so than public sector stocks. There are a lot of factors in this. So like what you generally see is also a function of the depth of the market. It's also a function of the opportunity cost of these investments and on and on. So like it is reductionist, like all things in economics. You will find like holes if you extrapolate literally. But I think to your specific point, my concern was that you are suggesting that there's some risk that's not priced into the market. And I would tell you that the market reflects all risks necessarily, unless you have knowledge that is asymmetric to the market, which is very unlikely considering the depth of that market and like you being here right now. Like,
I think the fact that they go through such radical corrections means there is asymmetric information out there.
I don't think the corrections were that radical. Like you had the subprime crisis, which was a pretty radical one. Yeah, but that was fairly unprecedented. Like you used that example because it was fairly anomalous. Well, there's uncertainty and there's risk. Like we have all kinds of crazy systemic risks that could happen. I mean, there could be like disease or something that happens on the planet and takes out like half the workforce and all this kind of stuff. So I mean, at lesser levels that happens. Like China, I don't know, might implode in some weird ways. So like it's certain that the market isn't going to be completely smooth because no one can price those risks out accurately, and it will price it out over time, but not in any given individual case. Like price discovery is a random walk. So. You are accommodating a lot of that risk in any of your purchases, and you will win some and you will lose some, but over time on a longitudinal basis, that should be mitigated would be my point. Unless you have insider information about the market.
I think there's a point, the fact that Bitcoin is probably differentially correlated with the S&P 500. You mentioned the
I'm sympathetic to that, and I get that, but there's other stuff too. I mean, you can't even short, you wouldn't want to take a position and then short it because you nullify it's not hedging at that point. So for the exotic audience, the point was that like Bitcoin could be going up if the S&P goes down. I'm sympathetic to that. That's certainly very possible. There's a lot of people trying to make that claim, like what the beta is between those metrics, and there's some people doing it badly and some people doing it well, and then there's results all over the place on that. It would make some sense at this point that that's true. It doesn't seem like an extraordinary claim to me, so I'm with you on that. I mean, honestly, in terms of my portfolio, I'm very overexposed to Bitcoin. So like, what do I do with it? Well, I put a lot of money in Bitcoin because every day, I'm here and I'm doing the thing. So like, I bought into Bitcoin for a lot of reasons. I have a lot of specialized knowledge. I spend all day, every day, getting knowledge that's not reflected to the general market. So much so that I do a podcast. I get leakers all the time. I hear stuff that probably a lot of the Bitfinex guys would love to hear because they could bring that news out to the market and they could trade on that. And that's the nature of the way I do my investments, knowing what I know now in an active management strategy. So for a lot of people that are looking for passive management, one of the reasons why I think recommend Bitcoin is the amount of time it takes for me to really understand this.
So in light of regulation and saying, what is your sense of insider information like where you often have access to it? Because arguably there's always going to be information that's in the trade. Can you actually regulate it?
Well, I mean, I think insider trading is legal in Bitcoin, or at least it's not enforced, which is as close as you get. But I get leakers all the time. I've got like the guy who stole Steemits money. Like he reached out to me. I've got employees at a lot of the major Bitcoin institutions that like send me like emails and stuff. They do that because they know that they can trust me. And I do the show and I get an audience, and people generally want information to hit the market. I don't know why. I think that this is actually like a risk mitigation thing in society, where like you're in like your little tribal village and there's like a monster out there, and so like you tell the village that there's a monster out there. And I think that people want information to be free because I think that the macroeconomic repercussions are that they themselves have reduced risk, at least in a more primitive form. So people leak me all the time stuff that hasn't hit the market. Sometimes it's bogus. Sometimes I got like a quack that just reached out to me because he thought it'd be funny. And there's been some things I've been like historically wrong about. But I get a lot of cool stuff, and I definitely get like a lot of emails and things. I can't talk about them, but people share them with me, and then what I do is I parallel reconstruct on the show sometimes. So people wonder like how I know things, and it's like, well, I already know the story, but I can't say how I got the answer, so I'll just figure it out with the guest. So I do a lot of that kind of stuff. So I think that's one of the reasons why people listen to the show. is because we make no bones about it. We are the repository for leaks, and we run a gossip show, and we get a lot of trust.
Are you concerned that somebody can really fuck in that? Like, for example, like, hey, I trust you very much, and, we're having a really big problem with this wallet. We're going to put a market and it's going to crash and that's the day. And we make a big announcement about the wallet coming out, and immediately all this, like, sure, you're going to get totally fucked.
So that's a weird one. So for the people online, Ross has said, like, don't I worry about, like, a scenario by which, like, a mycelium employee leaks me some information about, like, an implosion there at mycelium, and then, yeah, right. Well, that has happened to me once or twice. So, like, that, I am concerned about it. I try to vet it. So the thing is that you gotta try to, like, check things against people. So, like, if I got that from one employee there at mycelium, I might, like, run that by, well, I mean, I know you, so, like, the thing is that I'd probably just run it by you. So, like, not that you're one of my leakers, but, like, we're pretty close at this point, where I would just be like, hey, Ross, what's the deal? So, like, in that particular example, that's what I would do. But there are other examples where I would know people that are at least, like, tangential enough to where I could do that. And, like, even recently, I've got, like, I'm fishing around blockchain.info because there's a bunch of scandals going on there, and I can't report on any of them very directly, but I've been asking people close to that to get me more information. And, like, for the people that are on here, don't make a big Reddit post that, like, blockchain.info is imploding, but what we do know, I think, is the, what's the existing CEO? He seems to be demoted, and then Nick Carey brought back on as CEO. They have, like, a local Bitcoin service that was, like, local Bitcoin, but with a KYC, but that's never gonna work because, like, that's local Bitcoin, but without the efficiency. So they're changing up management there. They're making some hires as well, and I'm trying to figure out what the new plan is. But this is all stuff from leakers there, so I don't really have the whole story yet. So, like, as people get close to them, I'm asking them questions and see if I can figure it out. So sometimes I do, and sometimes I don't. So, do I have a question over there from the back, somebody? Or online? Yeah, are there any other questions? Should we... Perfect, okay, I like that. Okay, what's the last question then? Oh, that's easy. Is that really, okay. So I like famously do this to other people. There's a Satoshi definition of blockchain that I don't know by heart, but it's very easy to look at, and if we believe that Bitcoin or Satoshi was the inventor of blockchain, I always just refer people to that definition. It's in the main.h file, and it is which for a programmer, that's like the first file that's parsed on any given C program, so that is as close as you get to the start of the program. And it is above the declaration of a block. There is this very specific definition of it that I'm going to concatenate to a slightly easier form, which is a database whereby state is anchored to the corpus by way of work. And that would be that. So I think in a block by way of work. But the gist is blockchain was originally called a time chain. If you look at the original source code for Bitcoin, the version that was leaked in November of 2008, there wasn't actually the use of the word blockchain. There was time chain. And then between 2008 and January of 2009, it changed to blockchain. But yeah, state is encapsulated into folders, and that folder is adjoined to the chain by way of work, burning energy. And that's what a blockchain is. It's very inefficient. You should never use a blockchain unless you absolutely have to because the regulations require it. Only then is it an efficiency. Yeah, I mean, you have these sort of applied sense, these applied definitions. So like that, I would say is just the easy abstract. But in the applied sense, what you have is the creation of bearer instruments, digital bearer instruments, which are completely unprecedented. We've never seen anything like that. That is the marvel. And more specifically still, it is the component in that process that prevents double spending. So there's a lot of those things that go with it, certainly. Sure, I love externality costs. So I think you're right, that for the drinking game that's going on in Exotica right now, you guys aren't getting very drunk, so maybe you're gonna get drunk now. For those that don't listen to my show, I'm very big on externality costs. I think one of the biggest problems I have with like the libertarian platform at this point is the near complete ignorance on this notion of what an externality cost is. An externality is a cost that is borne typically by society, but certainly by the surrounding area that is uninvolved with the transaction between parties. So like if, for example, I'm making marijuana and I'm dumping my fertilizer in the lake, that fertilized lake now grows tons of algae, and now the whole village can't drink water because of a transaction that I did as the proprietor with a stoner guy. So that cost to society is, in fact, an externality cost. So I think a lot of libertarians think that the market will let that decide, but what I find is that governments compete by mitigating these externality costs, and they have macroeconomic efficiencies by way of reducing those costs in a way that all of society benefits. And that's one of the big problems I have with, I think, libertarianism. That is very important in the blockchain debates, particularly over the block size. So what happens in the Bitcoin blockchain, if not all blockchains, is that you engage in a transaction, you buy some weed on Alpha Bay. That transaction needs to remain forever across all nodes on the system. Those nodes were not part of that transaction. Those nodes did not engage in the sale of weed. Those nodes are doing things for the network for their own purposes, but they are bearing the storage and transmission costs of that transaction. So when you have a blockchain, oftentimes what you'll find is a lot of these proponents are advocating that their externality costs should be borne by like their competitors in some sense, or just by like the internet, like a mysterious sort of like, you will hold my costs for me. You see this with like blockchain healthcare. Like they seem to think that blockchain is for infinite storage. But that is very much an articulation of externality costs that they don't want to bear, that they think that they find a sucker for, but that's not how the universe works, seemingly, or at least not usually. So I think that a lot of people don't recognize that a lot of the things we do with Bitcoin are increasing the support overhead amongst those who are not part and parcel to the transactions. Because like, for example, how many of you are running Bitcoin relays in this room? Like who here is running a Bitcoin relay? We got one. We got the most ideological person in the room. And why do you run the relay? Yeah, like a relay node. Do you run one or do you not run one? You do. That's Rasa for the online audience. And I think it's great. I run a Bitcoin relay node as well, actually, I do. So, but I only do it because I putz around with it and I do development work and then I like want to broadcast stuff and whatever. And you want to contribute, and that's fine. But you were performing. So do they, though. Sure. The question from the audience was whether you could run a Bitcoin node from a Raspberry Pi. Yeah. Yeah, you can. Last I checked, you can. I don't know that many people are doing that, but I think that still is the case. I think also like, correct. Well, sort of, but where it actually starts to cost you money is in bandwidth. I don't think people realize this, but if you run like a full node, like do you do a full relay node at home, or do you like cut that down when you're like downloading movies and stuff? Is it just a receipt node, or do you send and broadcast? You do both? Yeah. There's a lot of bandwidth involved generally from people that are like downloading the whole blockchain when you do it. So the cost isn't even so much in like the hardware as much as it is the bandwidth. I've got a co-location center, and I cut off the Bitcoin relaying because my bandwidth bill was like $1,000 a month on that for a while. But I was also one of these guys that was like seeding the blockchain out to everybody. I think because I had a really high-speed link and like a major colo. But the bandwidth costs are one big part of it. Also, there are other like more specific problems you have too. So like latency. That is not necessarily like the Raspberry Pi kind of thing, but like internode latency, particularly across like the continental spans and such. Those are a big deal when you're talking about like the block size. So for example, if China got cut off, the concern would be that China would have like this like hard fork scenario where they weren't relaying blocks over here fast enough or something like that. There's a lot of these other little things that get into it. But yeah, the Raspberry Pi can keep up, as I understand it currently, and it isn't that much space. I think most of the argument right now for not increasing the block size is probably the hard fork issues. What we saw with like Ethereum repeating itself in Bitcoin would be disastrous. Ethereum didn't really matter that much because nobody uses Ethereum. All it was speculators. So they could literally like censor people on their network just by way of like voting for it, which would never happen in Bitcoin. That would be like pandemonium, I think. So.
Price discovery and government regulation that's meant to save you from these property violations or externalities. That's what you're calling an externality.
Yeah.
So property rights should deal with that. You lose someone's partnership toward against you. But the institution you're suggesting solve that problem violates everyone's property rights by taking action when you address it. So how do we get something that robs that property rights to save the property rights?
Well, so you don't own your property, and in fact, you don't own yourself either. The government owns both. Which I know people don't like it, but it's very obvious. Like if you don't believe that, you can go and rob a bank, and you can be thrown in a cage, and you will no longer be given autonomy of your body. And then same with like the land. The land itself is leased to you, usufruct, I believe is the economic term, and you make payments on it. If you skip those payments, they'll take the land from you. So it would appear that what we have is a system in America by which the government owns all these things. And like, you can say that that is an invasion of rights, but my point is that it doesn't matter, because it seems to be working far more efficiently than governments where like you had the ability to opt into things, seemingly. Governments where like you did get to opt into things, like taxes. So like, I can get into a whole discussion on that. But you will find these little pockets of like societies where people did claim out their own land, and they owned it. And if they didn't pay their taxes, like, they would have like a shootout with the cops, and the cops would go home. Those didn't seem to last for very long. And typically, the reason why is because I think what you see is that taxes do a number of things, but they normalize large expenses over the population. So like, we have these like freak insurance accidents that happen, like fires, for example. Fires happen to one out of every 10,000 homes or something like that. What does? You say that a private market would exist, I'm guessing, to like pay for like insurance on fire, but the problem, you have two problems there. One, the size of that market is necessarily going to be smaller. So the amount of fire service protection that you can do in like a situation where there's multiple fire service companies is going to require additional fire service companies. So there'll be like twice as many.
Fire's a bad case. You've got a lot of voluntary transaction there.
There's also that. What you have, I think, is you have a system by which the government requires you to protect that property because they own it. You're going to come and go, and somebody's going to own that home after you. And creating a market where you can be like given land, basically, with this like loan system, all feeds into, I think, the way that this works, where the government owns the land and they lease it out to people who take very good care of it and pass it on to the next guy when they're not using it. I think that you can say that you would like other things to happen, and that's fine, but you'd be hard-pressed to find a country that did it and succeeded. So what will happen then is that organized crime will come in. Like, you will have a government whether or not you like it. Okay, I'm fine. Yeah.
Yeah, but why would organized crime be able to compete if there's no government to protect their business?
What I would.
Profitable because
Well, you see this in like the favelas of like Brazil, where like they have effective governance through gangs. So like, what would happen in this environment is I would come to you guys. I would say, hey guys, let's get some guns, and we're going to take over this dispensary. And like, you guys probably wouldn't do that, but there's going to be a crowd of people that will, and we'll take over the dispensary. And then we'll use like those resources to continue. And what will happen is eventually we'll have at least some sort of need from like the local citizens to help us in that cause.
that presupposes two things. One, that you have the money to be able to get those guns, or
Yeah.
dispensaries are the ones that are generating cash. And then do you believe there will be enough people to believe it will be worth their life risk to get to work?
So the question, I mean, put shortly by Ross, is that
Productive, wealth-generating, organized group against people.
I mean, we have a term for that. The term for that is power vacuum. And whenever we see a power vacuum, I don't think you like that term, but what happens is that like the Fallujah comes in, and like the Fallujah is your government now. And so whether or not,
You're still putting a productive portion of society that actually has the money to buy the weapons, to pay the people, to fight people, versus what you're saying is basically dangerous.
so you believe that people would opt into like privatize like police services? Is that what like you would advocate?
I think that peace is more profitable than war, or is extremely costly.
Certainly. So what Ross says is peace is more profitable than war. I mean, that seems to bear out currently. That hasn't always been the case either. I think that like there are certain configurations of like the environment where that may or may not be true. But that's certainly the case, I think, now. But like,
I mean, you'll make more money if you trade with the people who live in there and know how to manage the resources than you would if you came in.
Well,
Or even if you came in and hired into this work.
the regulations reflect a lot of nature. So like there are parts of this world that are like more resource rich, places that can grow more crops, so they can ship them out. So like people are going to fight for that because that's more valuable to them. But in certain areas where like the environmental features are more normalized, where there isn't these pockets.
Why would we want to fight somebody for their fertile land rather than, well, you have the plant, you know, until I'll just pay you in your shit. I'll have to pay
I mean, history is replete with people that did this calculation, and they decided that they were going to take it rather than pay for it. I think that what you and there's a lot of that too. You're absolutely right. I mean, price discovery is a random walk. So for every like, I don't know, for every war we've won, there's been wars we've lost. But yeah, I think governments compete. Like that's something that you can decide for yourself. But I see it in Colorado. Colorado is now making weed legal, And in doing so, I see that people are moving here. Nevada did the same thing with casinos. They made gambling legal, and we know that that was a regulatory advantage. So I think you see that in various forms. And
My issue wasn't that they don't compete, my issue is that they don't compete in a free market visible way.
right.
They more compete, especially they compete in local additions and do something a little bit different.
So this is, again, the thing that I find in like the libertarian thought pattern. The statement was that like that free markets or something are independent of government's markets. But what I would say is that governments compete in the same way that any private business does. And if you believe that markets are efficient, then you should probably take the extra step to decide that the market for governance is also efficient.
What drives competition? What are the incentives of competition in private market?
What are the incentives of government to compete over private market? I mean, here we are looking at California, or in Colorado, for example. Like their citizens, like the government is very correlated with the citizens too. So like you don't have unrestricted power as a government, and you have to reflect, at least at some level, like some fiduciary duty to like the people that put you there. So there is a bit of feedback. So like the incentive.
Whereas if the people or maybe trying to attract business from outside of that, but the free market competes in your incentive is you do good, you get consumers to do money, you make a profit, you do that, you get some money, and competition is so good you get more people giving money for government, so get the money either way.
I mean, we have plenty of failed governments. Like we have all kinds of. I mean, the Federal Reserve is in fact the heartbeat of America's financial plan. So for a lot of people don't like that maybe, but like they've been doing it.
There is a competition, you can run into a wall and break your head and compete.
I mean, there's probably a day when like the American form of governance is not going to be around. But like in the current state of nature, given all of the limited resources and given all of the unlimited wants, this seems to be the most effective plan.
By the way, I have a question for you. Sorry. Of all the scam type things, which one was you thought was the most complex, weird, or
So the question is, what was the most complex, weird Rube Goldberg scam? Geez, I think Factum is a big one up there. I think Factum's a total scam. Ethereum is definitely up there. I think those two are probably the most convoluted. But oh geez, I've seen some really creative ones. Well, that would be an excellent one. Hope Gold Coin. Does anybody know the Hope Gold Coin scam? Does anyone not know the Hope Gold Coin scam? Hope Gold Coin, I'm just going to tell you what the pitch was, and you can decide what sense it makes. Don't ask me to explain it. They were going to tokenize shares in the gold that they held underground, and after like very little questioning, it turns out the gold they held underground was unmined gold on a land that they leased, that they had no intention of mining. So there was no extraction of the value from the land, and they were tokenizing this, and then this all like culminated in a goal to like run a music festival or something, right? Like, say it again. Oh, and that's right. Yeah, they were going to pay for the lease with tokens themselves. Yeah. And what was funny about that? So that Junseth sunk that project. I forgot how it worked, but like we got a hold of them. We finally did a phone call. I don't think we recorded that phone call, and like Junseth stepped them through every step of it, and I don't think that they knew how dumb that was. I really don't. They really.
on the very first step that they announced, like if you buy $20 worth of gold coin, you'll have that $20 coin, and then also donate $20 to a charity.
Right. That's right.
The one that wanted was actually Sean Duffel, and they never had to check.
Yeah. So.
So the first question right away is like, we give you $20, you have $40 total, where did that $20 come from? And we just take the drug and
Yeah. So Hope Gold Coin was definitely a good one. Absolutely. All right. Any more questions, Adela? Are we done? Time to enjoy Joe Tongda, I think. They're talking about Dr. Ruja in there in the dojo. All right, party people. I think that's it for me. I'm going to do some really cool content over the next day or two. There's no peer review. Trolling is just peer review. It's asking whether or not your car can smoke marijuana in the state of Colorado. So you weren't here for that. Somebody had asked if self-driving cars would be allowed to smoke marijuana in the state of Colorado. To the last panel, I thought it was very creative. Yeah, in any case. Yeah, so for everybody who's here at the Exotica stream, we're working on some really cool content. I think what we're going to do is we get Cheza to do like a live show where she gets naked and I just like teach you guys how to roll a joint and we make a night out of that. I don't know. Or maybe she'll do like something and I'll get her to like say some funny stuff that we'll use in my videos later. But it'll be cool. We're working on it. In the meantime, I'm going to try to get you guys